Yes, my people, I hope you're well. This is the next fundamental video in the fundamental series. If you're watching this from YouTube, this will be the first. But if you're in the Discord, if you're a member, this is the fourth one you've watched now. And we're going to be talking about the fundamental bias. Essentially going over how we can actually apply fundamentals to the charts and use them alongside our technicals to get a beautiful bias and some beautiful trades. Month to month as well. When we're talking about fundamentals biases, boys, we're not just talking about where the price is going for the day. We're not just talking about these little events. We're talking about the whole economy and actually getting a good daily bias, weekly bias, monthly bias, and hopefully a quarterly bias. It's quite hard to get a quarterly bias because a lot of stuff changes in the economy. But this is why we normally go for a month bias. And this is how in October we was able to get in some beautiful shorts for the whole of October on both EU and GU. I'm just going to show you the pairs now. This is GU. So this is the start of the month here, 1st of December. October. And then the last day here, 31st of October. You can see we had closure here and we had open there. And we had a beautiful bearish month. When price come up, it literally barely come up. So we didn't lose any trades. We only had dubs, which is a beautiful month. It was actually our first month back from Thailand as well. So it was beautiful to come home to a lully payday. And obviously this is Euro. We started coming up at the end of the month, but this is like month start here. And I think we closed the month here. But as you can see, we had an unbelievably bearish month for EU, even more bearish than GU to be fair. But we'll go into exactly why and how we was actually able to notice this and was able to trade this throughout the whole of October. And again, like I said, not even get any losing trades. And to be fair, I don't promote not losing, but I say you kind of have to lose, right? Because when you was back testing or when you was forward testing your strategy, you know it, what you lost a trade or two, but it's profitable. But profitable doesn't mean just having zero losses. But again, once you have fundamental bias on your side and it's so strong that all you need to do is pretty much get in on your technicals and then you're going to win trades. It's beautiful. And you're not going to get this every month of the year. It's not going to be like that. But if you're able to capitalize in these situations every year, which would be beautiful if you can, 1 month a year, then you're going to be laughing and you let the other months speak for themselves. But yeah, let's get straight into it, boys. Just before I start this video, I want to say that you can get a lot of all of this information that we've been learning, me and Lou, that you need to learn really. It's from a lot of websites. So you got the Financial Times, you got Bloomberg, you got Reuters, you got The Economist. You got ones that you can look at just for the American, just for the German. I've got a few German ones here. Dutch Well, Handelsblatt, I think it's called, the local Germany's Federal Statistic Office, OECD, BBC News Europe. There's loads. I'm going to link a few just in the bio below. If you're obviously watching this from Discord, I'll put it in the just below the video in Discord. If you're from YouTube, I'm just going to put it in the description below. But let's get straight into it, boys. So the first key point was investors were investors were concerned about the possibility of a global slowdown, especially in major regions like Europe, China, and the UK. With so much uncertainty about economic growth, people were playing it safe by buying dollars, which are seen as a reliable asset when other currencies look shaky or weak. And this is one thing to put in your mind, right? I know none of us really look at the dollar as a safe haven, but it actually is a safe haven in terms of currencies. When you have currency traders, if they are looking at the euro for one, I'll tell you this for free, boys. It's a fucking weak ass pair currency. Sorry, the euro is a very, very weak currency. So you'll see you'll see it mainly be bearish on, say, EG for an example, because it's so bearish. So whenever we have a bad economy in Europe and UK, for example, like we had in October, and we had pretty much the US not even doing too bad, to be brutally honest. They were getting their inflation down pretty well. They had cut off rates, which was beneficial to them. And we've got political uncertainty. We had political massive, we'll get into that point after, but we had political worries and uncertainty in both Europe and UK, which pretty much just pushed every currency trader to the dollar, which again pushed us to the dollar as well, because we noticed that everyone was going away from the pound and the euro. So we was obviously selling the euro and the pound against the dollar, which benefited us massively. But that's the thing too, mainly when I'm speaking about this global economic slowdown, it's just because we had in the UK, we had Keir Starmer come in and he was saying it's probably going to get a lot worse before it gets good. And as we've seen, we've had autumn budget come out, and obviously we've seen that, fuck me, taxes for businesses have gone up massively, business rates have gone up, minimum wage has gone up. So businesses are pretty much getting shit on. And what that means for the economy is It's going straight down, boys. Economy massively runs off businesses. It does make the fucking world go around, these businesses, I'll be honest. And you can see a lot of business in the US doing insane. We've seen the stock market boom this year. S&P's up for year to year. US 30's up to year. NASA's up year to year. So we've got the stock market in the US, America doing amazing as well, which is why we're seeing America, US dollar drive up so much as well, because their country as a whole is looking way more investable than Europe and UK. We know our country's gone to shit. We can all see that, right? But it also reflects on the currency, which is very good. If you boys are able to actually acknowledge when the economy is doing bad or good, fuck me, I promise you, like that, having that analysis next to your technicals is powerful, and that's what myself has been learning for the last year and a half. And I've actually able to been apply it to charts, and my trading's got exceptionally better. I've never had so many brave trades. I don't even give a fuck about losing, because losing's a part of it. But it's more about how you feel whilst you're in these trades. If you feel more braver, or you feel more, you feel like it's just more simple. You're thinking a lot less because you're biased. You've got to be looking for your technical sell setup, if you may, and then go from there. Anyway, moving on to my second point, political uncertainty in Europe. Europe was dealing with some political instability, especially in key countries like Germany and Italy. Governments were facing issues like disagreements over economic policies and reforms, and that kind of uncertainty scared off investors, making euro less attractive. And I'll be honest, it was crazy, to be fair. Germany had so many reasons why the economy was shit at this point. But we had debates over government spending. It was actually pretty bad. So essentially, I'm pretty sure we had we had the German economy. Germany pretty much put a lot of money into greenhouse gases, into green energy. So trying to get away from the fossil fuels and stuff. And that pretty much brought massive uncertainty to the public. Massive debates over government spending. But others wanted to avoid the increasing of national debt. Energy crisis, we had disagreements with the coalition, we had labour, ageing population, housing and inflation problems. There were so many things in Germany's economy why it's doing pretty shit right now. And when we're talking about Germany, the reason why I want to talk about Germany more than anything is because they are the biggest country in the Eurozone, and they make up for, I'll be honest, boys, they've got a lot of bloody money there. A lot more money than the UK. So if Germany are doing bad, the Euro's doing bad. That's why we mainly look at Germany when we do look at a Euro. Next point, UK political and economic worries. Again, we all know how much our country's gone to shit, but let's talk about it. In the UK, political debates over how to handle inflation, the economy, and the cost of living made the outlook unclear. Investors were worried that the UK's already weak economy could get worse, making the British pound less appealing. And again, what I was saying about Keir Starmer is essentially why everyone was thinking, fuck me, how the fuck can we put a pound coin into the British? How can we even look to buy the sterling, eh? When the economy looks, one, unclear, but two, obviously weak. So it's hard. We saw inflation come down. We saw interest rates are getting cut. But again, our economy is just falling through its arse. And we're now getting businesses being taxed hard, which again is a lot more harder for our stock market to be appealing to foreign investors or even just imports and exports. Energy and trade issues. Europe was also dealing with energy concerns due to unpredictable prices and supply issues. Since Europe depends a lot on energy imports, any disruption would hurt their economy. On top of that, trade tensions, especially with countries like China and the US, added to the uncertainty, putting more pressure on the euro. Again, a massive uncertainty around Europe, because the thing is that America can get a lot of their oil. Canada have a lot of oil, so there's not too much of a problem there. Plus, they got the petrodollar, so I think they're backed up by Saudi as well. So they're not too. When oil goes crazy down, it doesn't have a massive effect on the. Sorry, when it goes up, it doesn't have a massive effect on the dollar because import cost isn't going to go crazy. But for someone like Europe or us, the UK, it will go through the roof. Hence why we know that energy prices are so high in our country. US seen as a safe haven. So this brings me on to my last point. Even though the US has its own political debates, it was still seen as more stable compared to the other regions. The US economy was holding up better, so investors felt more confident putting their money in dollars. And again, this is massively. It's not even the fact that the dollar was insane, that the American economy was brilliant, right? It wasn't that. It was the fact that there was holes in the European and the UK economy. It went to shit. It's got quite bad, which obviously has pushed people towards the US dollar instead of the euro or the pound, which pretty much shows you that the market doesn't move off just the US dollar going up or down. It moves depending on how each economy is doing. But because we had both the euro and the pound being very poor, we had the dollar be so bullish. And let's look at DXY through through October as well. Let's get the start. So we had the 1st of October was here. 1st of October was here, and then we had the end of October, which was here. Okay. As we can see, massively bullish month. Again, not because the dollar was bullish, but because, well, not because the American economy was really good or booming, because they was nearly in a recession. Or I think they was in a recession in America, but it's purely because that the euro and the pound was so unappealing to investors that, yeah, the US dollar was getting money pumped into it. So again, it really comes down to, like, we're looking at all of these different charts, and we're looking at the technical analysis on it. Okay, what you want to do is just, first thing you want to do is look at the fundamental buyers, because again, we was able to milk that trend on EUGU, milk it. But the only way we was able to milk it is because we were so confident that the US dollar was going to be the more favorable currency out of the euro, the dollar, and the pound. So because we was able to take that information, put it onto the chart, it made our trades a lot more easy. And again, the thing is that's really hard in trading, guys, is the fucking mental side of it, right? If you've not got that cracked, if it's something that you struggle with, like hard, like it's very hard to go around that barrier. But if you're someone that can just go straight through it, beautiful, perfect. Make it as systematical as possible, and you'll be sweet. And in short, fears of a global slowdown, political uncertainty in Europe and the UK, and energy issues all made investors nervous. When things got uncertain, US dollar tends to go to safe option. US dollar tends to go to safe option, which is how we was able to milk the bearish trend and see that bearish dollar. And to be honest, boys, we're going to do the exact same thing this month. We've not yet had our analysis. It's like I said, it's the 5th. We actually got the elections tonight. That's going to be great. I think I'm going to wake up in the morning and the election is going to be done. Be excited to see how that comes out in the morning. And then we've also got interest rates being cut from both the Fed and the Bank of England on Thursday. So again, another big trading, not big trading day, but a big sort of info day. So this is what I do. I'll wait for these newses to come out, take the information from them, and I'll trade in the trend of where the economy is going on each currency. And that's how we're able to milk it, boys. And then again, like I said, we use that technical side to get into the trades. If you need help with the technical side, we've got that as well. Fundamental and technical both needs to be used, though, boys, to create that lovely recipe of success in trading. But other than that, boys, that's the fundamentals video part 4. Again, we'll be back with more fundamentals part 5. If you're on YouTube, again, this might be one of the only videos we post on this fundamental series. Maybe post one more, maybe part 8 or some shit. But if we don't, if you want to watch the others, get more clued up on fundamentals, make sure you join the Discord and make sure you are in the members so you can go ahead and watch these videos and learn with us. Everything to do with the financial market. But boys, I appreciate you, man. And I'll see you boys in the next one. Sweet.